Well, g'day there, everybody. Thanks a lot for joining me in the first market recap for this week. It has been relatively inactive. I do hope, of course, that you enjoyed your weekend and the very short break away from the markets. It is a very important week fundamentally, or at least news-driven potentially. However, the first two sessions have been relatively relaxed. We haven't seen the markets really pushing up and continue that bullish move, nor have we seen any material pullback. However, as I bring you this recording as at or very close to the close on Tuesday, we are starting to see a couple of candlesticks that I need to sort of warn you about. The Dow Jones Industrial Average, as at this recording, we do have about 50 minutes left in today's session. It is down about 50 points. It is looking, however, that we are entering into that of a slowdown. The good news is that we are holding up above these exponential moving averages, but just be prepared for the market more or less to tread water. We did speak about this over the weekend. We said that obviously we have to align our expectations of reality after the week that we had last week. It was a very profitable week, and really for the first two sessions this week, we haven't really drifted anywhere. Again, we are holding up above these exponential moving averages, and we haven't seen any sort of structural breakdown whatsoever, nor have we really even seen any material sort of warning signals in candlesticks. Yes, we do see these dark candles from time to time. That is very natural, so we're just going to have to follow along with this on the Dow, the S&P, and the NASDAQ. Now, the S&P 500, again, it is just printing slightly negative at the moment, but we do have that of a shooting star candlestick, very, very minor shooting star candlestick. This was yesterday during Monday's session. However, today on Tuesday, we have sort of an inside day harami candlestick. We'll see how what the closing print is like on Tuesday, but again, it looks as though we are sort of beginning to set up that of a wedge sort of continuation pattern. Who knows, maybe a consolidation or sort of stair-step pattern, as long as we remain above most likely the 20 exponential moving average or even these two past swing highs. Again, this goes for the Dow Jones Industrial Average as well. This is coming in at about 2,740. If I can just use my sight at the moment to give us a horizontal line and drag that over to the right, as long as we remain above this red line that I'm drawing, the market is still very favorable, and we are still looking at the S&P 500 to drift over the coming weeks and potentially months up to 2,852. The Dow Jones Industrial Average, nothing has changed whatsoever. We're still looking at these open windows closing, hopefully in the month of June. If not, it may be in the month of July. Now, what we are also seeing, again, this is what I'm paying attention to. The NASDAQ at the moment. Now, this is Tuesday. We're starting to see that of a pronounced up week, very similar to what we're seeing on the S&P 500, and it is showing up around this resistance area. I've had a lot of people email in over the past number of days speaking about the odds of a pullback to actually retest roughly this 7,500 area, and my response across the board has been, yes, that is always entirely possible. It's always as well welcomed when we see the successful retest and then the subsequent bounce, but it doesn't necessarily have to happen. If you look at some of the price action over the past 2 weeks, we don't have that of really any sort of real body gaps, okay? So there's no gaps that we essentially need to fill. However, it would be nice structurally for the market to pull on back down and to retest this pivot at 7.5. We're still good to go. If the NASDAQ decides to break out above 7,736, who knows, that may happen as at the trading session on Wednesday. And if that was to play out, I would be jumping on board with adding to some Q positions. You can still see 7662. If not, you've got the potential, of course, to jump into the SPYs if you want to jump into a continuational trade. If you do, or if you are thinking about that, however, think about risk and reward and the breakdown of that ratio prior to entering into any trades. But at the moment, yes, we are starting to see potentially some early reversal signals, but at the moment, it's not justified enough to really bring up or place aggressive stops at this particular point. Pay attention to the rising exponential moving averages, the 10, the 20, and the 50. These are still looking very healthy. And above all else, we're still technically breaking above the swing highs. And today, even on Tuesday, we just registered a new intraday all-time high on the NASDAQ as well. So you can see tentatively the NASDAQ is pushing on up. We haven't seen, again, the true breakout above the swing highs last week, but we'll just monitor this, pay attention to it, and we'll see what the market brings us as we sort of move into the second half of this week. Now, this leads me into one market which has sort of kicked the trend. You can see on the Russell 2000, we're just simply breaking above 1641. We had the first entry over here at 1594. Again today, much like the NASDAQ and the S&P 500, you can begin to see that of the upper wick. All right, this is a warning signal. It's an early reversal signal. However, it doesn't necessarily mean that we must, and an impending reversal is about to happen. This is just technically probably a lot of people just taking some of the profits after this most recent run up on the Russell, pardon me, 2000. If I can bring this into context for you, my personal target on this is up here at 1,726, rounded up to 1,730. It doesn't really matter. This is essentially the back test of the trend line leading into the 2007 peak. So when we broke that, we entered into a bear market, and this is now the first time that we're coming up to actually retest this since we load in the beginning of 2009. So it's a critical area to pay attention to. I think the Russell is going to run in conjunction with the Dow Jones Industrial Average. So all things considered, we are still trending, but we do have that, or at least the early formations of potentially that of a shooting star candlestick as well. Now, I spoke about this also over the weekend. This is the transportational average. You can see the breakout that happened on Monday. During the weekend and over the weekend, the transportational average, it hadn't actually confirmed that of the industrial average, i.e. we hadn't really seen the legitimate break of this resistance. We'd sort of been just treading water again, setting up that of a stair-step consolidation, but we were holding above, of course, these rising exponential moving averages. Now, as you can see, we started to get moving on Friday last week, but here's Monday's session yesterday, and then, of course, today. So it looks as though the transports are short-term confirming that of the industrial average movements, or at least it is breaking above the subsequent swing highs, which is fantastic. And you should be paying attention on the transportational average to our target up here at 11,336. There's no guarantees, of course, that we are going to hit this within the next 1 to 2 weeks, but I think by or come July, we should be trading up around these levels back at these resistance areas, okay? But always, of course, be prepared and be mindful that generally we will see a couple of pullbacks back into these rising exponential moving averages as we continue to grind on up and approach and ultimately close these open windows, the magnets, so to speak, of what I've been speaking about over the past number of months. Now, our top 12 list, it has been relatively inactive so far this week. I mean, if you pay attention to these stocks, you can see for yourself Apple more or less moving sideways. You can see we're just resting on these exponential moving averages. So again, this is just natural. It's just what happens during that of a trend. But ultimately, we should see these continue to the upside. Amazon more or less moving sideways, not doing a whole lot. Boeing Airlines moving sideways at our 370 pivot. Now, I can continue with this. You can see Baidu pushing above 264.97. By the way, this is a gap close trade. So if you are in this, you can bring your stop up, most likely below the low of Friday's candlestick. I just wanted to speak about COP because we got very close to our target at 71.05. This was yesterday. We didn't tag it. We fell short of our target by really a couple of pennies. If you just pay attention to the high, which is the H figure on my screen right here, you can see the high was 70.99. Our target on this was 71.05. So we're 6 cents away from automatically being stopped out of this at our target anyway, and essentially banking that profit immediately during Monday's session, putting that money in our pocket. You can see today we are down $1, and 11 cents. This was after our entry at 66.97. So overall, this is a relatively profitable trade at the moment. I wouldn't be playing around with COP. We got very close to hitting our target. We're back at that resistance area. We do have the beginning sort of formation of an evening style reversal, a 3-day reversal pattern. This is something that you need to pay attention to. So what you should be thinking about and considering is just placing a hard stop on this trade, just to guarantee, of course, that you are going to lock in profit on this COP trade. The last thing you want to see is to see this roll over and come on all the way back down to $67, which is, of course, possible. So again, I'd say play a little bit defensively at the moment and just guarantee those profits on COP. Now, as I speak about individual stocks, I just want to reference some external stocks that I have made public and also private. Here's HD. The breakout occurred last week at 191.63. Today, we're pushing above $200 per share. You can see on the right-hand side of my screen at this recording, we're trading at $200.53. That is with about 50 minutes left in Tuesday's session. So you can see that we are approaching 204.88. If you wanted to take profits on this trade, I don't blame you either. Yes, we are at that sort of psychological round number, $200 per share. So that is a very quick $8.40 more or less from our entry point over here at 191.63. Very pleased, very happy about this trade. Just look at the consecutive series of white candlesticks behind the movements in HD. It's just been up, 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 up. Very happy about this trade, but at the same time, tighten your stops on it. If not, take some of those positions off the table at that psychological round number of $200 per share, and you should be sitting there with a big smile on your face. Also, in addition to this, we've got FDX, which is breaking out above 257.80. Now, again, we've got earnings on this stock. It is scheduled for the 19th of, Tuesday the 19th, which is next week. So what you need to do is close out of this trade no matter what prior to the week ending. Big disclaimer, close out of FDX prior to the week ending. I spoke about that over the weekend, but don't hold this over the week. We are running up to our target, of course, at 272. We may get there, we may not, but please, please, please just close this out for a profit prior to the end of the week. And again, you should be sitting there with a smile on your face. We're up at 265.46 at the moment. So again, some pretty decent movements. This is about $8 already on FDX in the space of 4 sessions, which is a really good result so far with this open trade. Now, also, I've got JD. JD last week went absolutely parabolic. Well, look at what's happening today. You can see we're up another $1.63. We're trading now at 41.27. This was after the original positions that we enacted at 37.22 and 36.12 I was speaking about. Let me just zoom out and show you this potentially being that of an exhaustion gap just here. And then we had all of the signals of a trend reversal with that bullish divergence which was forming. And especially after this little false break to the downside that I pre-warned you about with these Bollinger Bands as well. So, I mean, since we've priced this in at 35 or at least established that low, you can see that we're just taking off. And even as at Tuesday, we're breaking above the highs of last week that were already remarkable in terms of returns, like percentage returns with those call option contracts. So this is working out incredibly well. This has turned into one of my new favorite sort of immediate trades that I have personally open at the moment. And there's no reason really to be wanting to close this out at the moment. We still have higher targets that I've referenced in the past, and it's looking quite good as well. So I just wanted to update you there, pardon me, on JD. The other stock which has acted really sort of volatile over the past number of sessions is that of TWX. Pay attention to this. We first got triggered into this at 94.58. This was towards, I guess, the second half of May. Pretty much moved sideways. It then began to tag this bullish sort of trend line. And on, I don't know how many touches it was, but eventually we tagged it, we respected it, and we've just taken off. So you can see over here, what date was this? This was the 6th of June. This was Wednesday last week, where we really started to see that long day Morobozu candlestick. Now, since then, we've come on up. We haven't hit our target at 97.60, but it's still looking quite good. Yes, I can make the argument that we are at a resistance area. So again, much like the discussion that I just had with you on COP, all right? There's no reason as to why you wouldn't want to potentially take a couple of positions off this trade. I know it's not as profitable as HD or FDX or JD or a bunch of other tech companies that we have been in. However, there's no reason that you cannot take profits, especially if you're seeing sort of signals of this sort of volatility. I mean, look at yesterday's candlestick. Very rare for TWX. I mean, it's obviously respecting the pivot at resistance and also the support area. It looks as though we are going to draw into the apex, but continue to grind higher. So it sort of limits our resistance at the moment, or our target. And when you see these types of signals, you can always take profits, really. Just bank, or at least a portion, if not all of the trade, and just close it out and be happy with what it did. It's not as profitable, again, just to recap, as other trades, but it's still looking good. Now, I can very quickly go through a couple of other stocks. Obviously, Tesla at the moment is going parabolic. That's fine. But you can see here, Netflix more or less moving sideways. Looks like a little wedge or a stair-step consolidation or sort of continuation pattern. However, we are starting to see pronounced upper wicks as well. Not ushering in that of a reversal yet. We might see a little bit of slack or a little bit of selling pressure. But again, no signals of a reversal. IBM's pushing above, pardon me, 146.65. I'm not all that excited about IBM at the moment. I mean, we have been blessed with a lot of other trades, decent trades. IBM hasn't really fit into, I guess, the category of quality of trade, but hey, it's above 146.60, and it's still moving in conjunction with the overall markets. Google, I've spoken about. It looks as though we're setting up that of a bull flag, so that's a little bit exciting. The other stock, however, really that I just wanted to very quickly touch on was Caterpillar, because Caterpillar is throwing up a couple of upper wicks as well, but at the same time, it's just treading water. You can see simply here, we're simply moving sideways. Now, again, we threw up the possibility of this being a bull flag. At the moment, however, we do have another shooting star candlestick. So at the moment, it's looking as though any potential, or at least immediate breakout above 157 and 158 has sort of been temporarily squashed. Doesn't mean that the trade itself has reversed. It just means that you're probably going to have to sit through that of a little bit more of a sideways market move, or at least individual stock move, until we see price action definitively push off these one of these 3 exponential moving averages as well. But I just wanted to say that we do have that upper wick, which is still under construction as at today's session on Tuesday. All right, so I think that's going to do us. If you have any questions, please email success@pivotpoint-trading.com. Otherwise, I'll be back with you on Wednesday afternoon for another market recap. All right. In the meantime, enjoy the market closure. Enjoy your Tuesday evening, and I'll see you all in due course. All right. It's James signing off on behalf of Pivot Point Trading. Farewell.